Okay, now we are going to see the operating profit. Now we are going to see the operating profit ratio. For that we need operating income divided by sales multiplied by 100. Okay, so here operating income is nothing but what? EBIT, earning before interest and tax. So I have already ready-made profit before tax. I have this data already ready-made with me. So I'm just taking the same data here equal to, and I will be copying the same data. Okay, for 2000. I will be copying the same data. Now interest part. Interest is here. Already we have already done this finding and tabulation of the data. Done. Now we need to find first of all how much is our EBIT now, earning before interest and tax. So what we have to do, 8, what we have to do now, we have to do this profit before tax 2812.42 plus this 235 235.47. Okay, so here I will calculate with this formula. So I'm able to get the EBIT. Means what we are going to do here, that profit before tax, in that we are going to add on this interest cost. If you see here in our balance sheet, this profit before tax, when it is coming, when the profit before tax it is coming, so this financial cost is already deducted by them, correct, already deducted by them. But here we are only considering the interest cost, so that's why we have to add on, okay, interest, because what is the wording, earning before interest and tax. So tax before, so I have the interest cost we have to add, so we are able to get the EBIT of the particular organization. So in this way we have to do this particular profit before tax plus this interest cost. In this way we are able to get the data. Okay, then the sales data, it is already, we have already tabulated the revenue data. Okay, the same I'm writing here. Okay, use the formula, very simple, that EBIT is 3047.89 divided by 49 0.85. The same way I am calculating now, EBIT divided by sales multiplied by 100. So this is nothing but what my operating no need of 100, only this it is, I already given a percentage sign, so it is coming, it is 16.6.16%. So in this way I will stretch up the formula, so you can see it is 13 point, it is 14 point, it is 10 point. Just cross check the data once. Yeah, done. So this is nothing but what, operating profit ratio. Okay, means it is again showing a profitability of operations. This is showing overall company's profitability, it is showing operational profitability. Okay, because here we have minus the interest cost and tax. Here in net profit we are considering both. Okay, so now we'll see the return on equity ratio. What is the formula? Net income divided by shareholders equity. So net income is nothing but what, here I have duplicated the data. You can see the profit ratio, sorry, profit for the year is nothing but what, a net profit. This is the net profit, correct. So here I am going to stretch the information as it is. You can see the last year the profit was 3494.48, same as here. Okay, then the equity also I have copied here in my table. You can see here share capital fund, so that I am copying here, and I will copy the same here for the remaining 5 years. Okay, then the divided, the net profit divided by equity shareholder. So this is showing that how much is the return, they are getting. Okay, here you can see it is 3.52% return they are getting. Okay, interpretation, as I told you, interpretation I will be giving you in Word file separately. Here we are just doing a calculation part. Then return on capital, whatever the capital they have applied on that, how much they are earning, return on capital. So here is a first is a earning before tax divided by total assets. From that you have to minus current assets. So you are able to get a capital employed. So you get a capital employed. Okay, you get a capital employed. Current assets minus current liability. So you will get a capital employed, and this is a EBIT we are going to consider. Okay, the EBIT part we have already calculated up here, correct? So as it is, I am copying here. Okay, as it is, I am copying from the up. You can see this same field here I am copying. No need of again adding into the profit the interest cost. Then the total assets, this total assets here is already we have done the tabulation of a total assets. Same I am taking total assets. Okay, this is the total assets, so I am just stretching it. Now the total current liability, this also data I have, total current liabilities. This is the total current liability. This is my total current liability. Okay, done. In this way I am now copying. Now we need to calculate capital employed. So what you have to do, total assets minus total current liabilities. The formula is this only. If you see, the formula is showing same, that total current assets minus total current liability. So you will be getting capital employed, correct? So this is a capital employed now. This is capital employed. Okay, I will show you one more time. Total assets minus current liability. So I am able to get capital employed. Okay, then in this way. Now what you have to do, EBIT as per the formula, EBIT divided by the capital employed, correct? So here is a EBIT data is here divided by your this yellow field, you can see this particular capital employed. So this is nothing but what my capital employed parameter. Okay, so I am just stretching the formula. Okay, so this is in this way I have calculated now capital return on capital employed. Then now the last ratio, debt equity ratio. Debt equity ratio is very important ratio for the banking. These all ratios are important for all the banking sector, as well as for analyze any company. You need to see these all 3, 4, 5 ratios which I am here discussing right now. Okay, this is a debt equity ratio. Debt equity ratio is nothing but a total debt divided by total assets. So here I have just done a duplication of the data. Okay, I have just done the duplication of data. Here is debt is nothing but what, students? Here is a borrowings. Here is a borrowings. You can see the non-current liabilities. It is nothing but what your debt data, that how much is the loan they have taken. So here I am just stretching it. Okay, I will just pay from 2019-18 data, your non-current liabilities borrowing. Okay, in this way you have to take the data. Then the total assets, this total assets data is also we have here total assets on top, you know, 10, 68, 21.91, same data I have copied here. Okay, I will just making equal to and taking the field. Okay, and just stretch the data. Done. And then just do the calculations, that depth divided by total assets. So it is showing you the proportion, that how much is the depth they are having. Okay, so this is nothing but what the debt equity ratio. Here I'm just copying the field. Okay, here it is showing 0 because 0 depth are there. It is coming 0.13%. It is 60. Here you can see a slightly increase. It is 69 something, so it is coming 16. You can see here decrease in the year 2020. So this is nothing but a calculation of a debt equity ratio. Okay, interpretation part, I will be uploading a special separate Word file. Okay, and that you will be getting all the interpretations. Okay, when you are writing this assignment, your interpretations one by one you have to paste here, and you have to give the interpretation of ratio as a sheet name. This is a worksheet and this is a workbook. Okay, in that workbook give a name to that sheet as a interpretation of ratio, and give one by one here like this. Okay, liquidity ratio. Okay, and one by one you have to write. Okay, the same Excel with the interpretation I will be uploading into our classroom. Okay, this video I have created only for the calculations part. I have done all here. Okay, now you have to prepare this first for calculating these all ratios. Okay, total 5 ratios here we have done. Okay, profitability, in that we have done total 4 ratios, and in leverage we have done 1. In liquidity we have done 2 ratios. Okay, so these all are the major ratios for the financial analysis of a organization if you wanted to just overlook the company. Okay, so thank you.